What's up? What's up? I'm gonna give everybody a couple minutes to get in here. Probably just like 2 or 3 more minutes. Sorry about being late. I actually had to go pick my daughter up and ended up getting home way later than I thought. But it is what it is. We're here. So usually on Friday nights, it seems like a lot of people are out doing stuff and don't really make it and watch it later. So Also, hell yeah, with the motivation. I love it. All it takes is one man to change the world. Always remember that. Never know it could just be you. Goes for everyone out there. He is vibing through your city. His name don't lie. Also, everybody in the Discord, if you could please, I want to make sure I respond because every time I get done with the streams, I always see a bunch of stuff that I didn't see because it's not in the late night crypto. I'm gonna like literally show you guys right now on stream how to get to it because every time people. So if we go to right here and then late night crypto, there's a chat thing right there. This is what I see while we're streaming. So please ask away or unmute your mic if you can. I know some people have issues for whatever reason, but this is where there we go. See, Morval gets the right idea. So does Cause. That's the chat. So I don't know why this went away. There we go. So I love it. Good vibes in the chat tonight. Everybody's hype. Anonymous, what's up? Got the Versace shades on. Somebody said no slow mode in here. What is there slow mode in the other ones for you guys? I didn't even know there was slow mode in crypto chat. What the fuck? I didn't even know that. It makes sense that you guys are degens. No, I'm just kidding. Only some of you. Like silent. No, I'm just kidding. I love you, silent. So what I want to go over, we went over this. You guys that have been tuning in have seen it. Hell, we caught a play off this model the other day. This is exactly the model that we used to catch the SPY trade the other day. It was great that we were live, and you guys see how quick that trade played out. And I want you guys to really learn how to spot this. And I'm going to point out a couple things. That's why I wanted to go deeper on this infographic. Then I try to fit as much value and info in a digestible amount of text and in this small picture. But there's a couple things that I do want to make. Okay, my brain's not working. That I want to focus on. That I want to make sure that you take from it because I kind of wrote a book about this. Although it's really very simple at the end of the day. Remco, I'm gonna if you can hear me, if you can mute your mic, that'd be dope. Unless you want to talk, I don't know if you know your mic's unmuted or not. But sorry, add to server mute. If you want to talk, anybody that's server muted, always like at me and be like, "Yo, unserver mute me." The only reason I don't ever do it like personally, it's just because sometimes people don't realize their mic's not muted. But so where were we? I think I was just talking about how much more I could go into this. So the main tweak that I've done since we started talking about this, and this is not like I invented this model. I'm just trying to really like put it in a much easier, digestible explanation for you guys. I don't think there's anyone who like created this model. I think it's just using um, a school of thought or a logic. ICT pushes the model. There's It's been really ever since liquidity raids were a thing. But I want to put it into a non-cryptic, direct, easy to digest because it's really not that complicated as a lot of people make it. So first things first, and this is where I tweak it a little bit to where it's different than a lot of people I see. Um, you got to make sure that for me, I personally want an imbalance. So this is an M15 perspective. This morning, this is actually this morning on SPI or well, SPY, and I was going to use a different piece of material today for the EDU content, but I felt this was going to be more valuable to you guys, and also it's going to be cool because we're going to go back and we're going to go over exactly how I or what date I got this from. So for me, I want to make sure there's an imbalance up in this region above this high. So that's why I said identify an imbalance above or below an old high or a low. And no, I didn't mean for that to rhyme, but we know maybe you don't. If you're new, I have an infographic on imbalances. My Twitter is down here in the bottom left. You can go check that out, or just put it in the comments. I can link it. But uh, short review on imbalances is when the market only offers one side of liquidity because there is a great enough inefficiency in supply and demand to where the market has to expand rapidly to find a fair value or to find equilibrium. So when this occurs, we know that in this imbalance here, that there still remains, or we anticipate orders to be remaining there. Oftentimes institutional orders, because when the algorithms are spamming their orders to create that inefficiency of supply and demand to push price down, which is their intention, um, they leave some of those orders behind. So they'll oftentimes create this false breakout level you see right here, right in front of the imbalance or in the imbalance, depending on what time frame you're in. Oftentimes the high or the low isn't in a optimal trade entry. So for instance, if we're looking for a rate on a high, oftentimes that high is not going to be in a premium of the fair value gap. Now remember, price is fractal, so you might see a 15-minute fair value gap. There could be a 20-minute fair value gap, or a 25-minute. I've seen people use all sorts of different time frames. That's not really the focus. The focus is understanding what we're trying to visualize because we're just using time and price to visualize an occurrence or visualize the tape in our own way. It's just an easier way to digest it. So it doesn't have to be in premium on every single time frame, but ideally we want to find a imbalance that it's if we're looking for a high to be rated, we don't want the premium to have been tapped into or equilibrium for that matter. Vice versa, if we're looking in a buy scenario, we don't want discount. So in this example, we have a high that kind of front runs the optimal trade entry of this fair value gap, and this is coming into the morning. This candle right here you see is at 9:30. It's at the open. So this is I think it's around like 4 in the morning to 9:30, and you'll see that little morning range, that pre-market range form, where there's money being moved around, but the big orders a lot of times haven't hit until New York equity open, or at least there's not an availability of retail liquidity to be induced. So we look, overall, if we see imbalances and breaks of structure to the downside, we know that the institutional structure is bearish, and once these orders are filled, the opposing liquidity, which is the sell side you see down here, is going to be sought after. So if you're a market maker and you have a ton of orders residing up in here in this imbalance, guess what you need to execute those orders? Well, you're going to need buyers in this scenario because these are going to be sell orders since the candle was moving down. Only one side of liquidity was being offered when the market was rushing down. So when we have these imbalances with a high front running it, think of that as a rat trap for retail traders. It's a rat trap for early shorts, and it's also a rat trap for breakout buyers. So either way, it's just buying liquidity. That's why we call it buy-sided liquidity. So if you're looking to sell, if you're a market maker, you're going to have to engineer people that are going to buy from you. So that's what they do with this high. That's what the intention of this is to induce that buy side liquidity. So The second step after we've identified our imbalance above an old high or below an old low, we wait for the high or low to become or to be rated. And the biggest, and if you don't take away anything as far as the fine print from this, you need to have displacement, because it's really easy to get lost in the, you guys hear me use this analogy a lot, but people do, look at it from a 2 + 2 = 4, very robotic perspective. You have to be practical. So if we're looking at it from a practical perspective, we got to remember what we're trying to identify is institutional manipulation. So if a large force is manipulating price, it's always going to be done with displacement, right? What is displacement? Well, whenever the market is consolidating and we have a range, that means that the market has found a fair value or it's balanced. Everybody thinks that the price is fair, so to speak. But whenever a large force or a large set of orders come into the market, that can displace that balance. So that's what we look for whenever we're trying to um, gain confidence that a large force is sponsoring this move. So we absolutely have to have displacement in order for us to have a trade. Really, any liquidity raid needs to be done with displacement. A lot of people that I work with, whenever they're really first identifying how to trade liquidity raids, they get the concept, but they get FOMO and they don't require true displacement. And they'll use the excuse anytime a high gets taken or a low gets taken, they say, "Okay, well, Casper, how do I know, where to trade this?" And the simple way to weed out a lot of the bad trades is require displacement. If there is no true raid, remember a raid. Think of what a raid is. You know what I mean? A raid's not done inching up, it's done with force, right? So we need displacement. Also with indices, time of day is mandatory. This has to be occurring for the AM session. Notice that's the title of this. This needs to happen between 9:30 and 11 a.m. and 11 is on the late side of things. This morning it happened, I think, within 5 to 10 minutes of the market opening. And oftentimes, just like we went over the other day when we caught the live trade on SPY, you're going to know the true intentions of the market makers within the first 3 5-minute candles, once you have developed a good daily bias. So again, displacement and time of day efficiency is mandatory, right? That's going to show us that the large force is at play. So after we get the raid with displacement, it's not just a buy or sell scenario. That's kind of trying to, we're trying to catch a falling knife, but we got to do it the right way. So, or I guess in this example, it's not really a falling knife. I don't know what the analogy for that is, but um, you get the picture. So now this is one of the things that I wanted to um, accentuate because I didn't want to write a paragraph about it in the infographic. The three drive pattern, which we've been talking about on Bitcoin's daily on the 1 hour. So I know that crypto's dumped like crazy today. Hopefully, those of you who've been with us and have been paying attention, there's no reason for you to have not expected that, unless you just faded everything we've been talking about. But I doubt most of you. I think most of the consensus, at least at our Discord, everybody, was kind of been on the same page and people were prepared for this. So uh, whenever we're looking at the three drives pattern, we're not going to go into a ton of that, but think of it as a distribution pattern. There's some Wyckoff people. I see JL, you're in here. You'll be able to probably explain this later on. I'll actually want to pick your brain on the three drives, but
Sure.
it's an old ICT pattern. Basically, we're just going to look for three drives or lower time frame liquidations where you know dumb smart money or just dumb money in general tries to enter. So we see right here, if you were to just enter with a stop loss above that high, you would have got stopped out. You see right here, if you would have done the same thing, you would have got stopped out. So how do we know when to enter? And it's the same exact principle. We got to have displacement. We got to have proof that smart money is either selling the pump or buying the dip. So if you see right here, I hope you guys can see where my cursor is. We see this big move to the downside, breaking market structure. Now, one thing I want to be clear on is those of you who've been in the private classes in the Discord, or those of you who trade supply and demand and you have swing and internal structure, I'm not referring to that. I'm referring to any candle that is a low or a high. For instance, any candle, if we're looking at a low that has a candle to the left and to the right with higher lows than it. I don't care if it's the internal low. I don't care if it's the swing low. And go back test it. This is, I promise you, for instance, the SPY trade we took the other day, it wasn't a internal or swing high that was broken when we took the long. It was just any market structure. So once that's broken, now here's another unpopular tweak that I've done to this model. I don't necessarily always require to wait for a fair value gap entry. And this also goes in hand whenever people ask me in the Discord, if we're in a trade and let's say it's up, I don't know, 10 pips or whatever, and people say, is it still good for me to get in? Well, most of the time, unless the trade's already played out, yeah, it's definitely still cool to get in. But guess what's changed? The risk reward. That's it. You gotta adjust your stop loss. There's nothing changed. As long as take profits haven't hit, as long as the trade hasn't played out, the only thing that's different is your entry, right? So in this example, let's say we get this break of structure. Now there actually wasn't. Maybe we'll go back and see. I don't want to say there was on any time frame. On the 1 minute, there wasn't a clear fair value gap except this tiny one right here, very small, which is a fair value gap. Now, price never returned to that. So what I do is, because I'm actively watching this every morning, I watch for this to happen. It doesn't happen every single day. Almost every day, you'll be able to get an entry off this, right? That's not financial advice, but I don't want to guarantee people stuff because people just come around and start blaming you for shit. But um, it works pretty good for me personally. So whenever this happened this morning, I just immediately took a sell, stop loss above the high. Some people always wait for the fair value gap. Now, for me, the way I determine whether I wait is by risk to reward. If I can enter the trade right there where we get a break, and I'm watching it, and I've got it to where when I'm watching this, I've already calculated the distance to the high. I know exact because SPY on MetaTrader is super fucking easy. It's how many dollars to the high. It's very easy. So I've already calculated that and added my spread in. I'm literally sitting with MetaTrader open with the amount of lots ready to hit open a position. So for me, if price is right here, I'm not necessarily always going to wait for it to come up 30, or 50 cents. It doesn't matter that much to me personally. Now you can take this and do what you will with it, but that's the way I look at it. I'm not that, um, you know, prudent about waiting for a return. Now, if this move had been much larger, and let's say, you know, the risk reward was damaged and it was too close to my target, then that's where I would wait. And sometimes you'll miss a trade, which is totally fine. There's no reason to just, FOMO into a trade. But I also believe that once you understand and have a good footing in your model, you don't have to miss a trade either, because a lot of people that learn smart money, they miss this is better than being a FOMO trader, but it's also bad, right? When you just miss a shitload of trades where your bias is right, that's a problem. You know what I mean? Because yes, you're not losing money. It's much better problem to have than somebody who's FOMO trading. It's definitely a way better problem to have. But you got to find tweaks to where you're able to participate, because, you know, everybody, trading isn't about your bias being right. That is a key element to what success in trading requires. But success in trading, what it's based off of is execution. So a lot of people I work with one on one, they get like paralysis analysis, and it's really easy. Like it happened to me too. So don't trip on it if this is speaking to you, but take it in the sense that you gotta get active. You know what I mean? So don't let like, let's just say in this scenario, it broke down and you're 50 cents from the fair value gap entry. Some people may disagree with me, but I'm going to take that trade because I'm not going to sit there and be that. Again, it's 2 + 2, right? We got to be practical. The market's fluid. You got to be fluid. And once you understand what's going on, and as long as you don't damage your risk reward, there's no harm done, in my opinion. Because we're losing the same amount of money if our stop loss hits, no matter what. As long, and if you're not, then I don't know what to tell you. You're way behind. So we got to require that break of structure with displacement. Again, displacement is 100% required, always. Now, for targets, what I do is I just target the closest opposing liquidity on a 15-minute time frame. Now, the other day, we were really close to the daily draw on liquidity. So, you know, that was a little different. If you're very close to your daily target, play your bias. And we reviewed that already. We won't stay too much on it, but that's a situation where I might target a little further. But even if I think the market's going to continue, which I haven't even looked, I saw it look like it was, so I didn't want to watch it continue without me. I'm sure it probably did. I haven't looked at a chart since this morning at like 9:50, except Bitcoin right before I got on, and that's about it. But you can target that opposing liquidity, or you can ride it into the New York lunch hour. But always make sure to trim or really close the position in full coming into 12 p.m. Sometimes, yeah, you'll miss out on some gains, whatever, but you have to be prudent enough to understand that you're not gonna, not every tree grows to the sky. You know what I mean? Um, the sooner you accept that, and the sooner you're okay with letting a trade run after you take profits, that's a sign that you're starting to become more consistent in the long run. We don't get rich off of, you know, winning the lottery. We get rich off of calculated systemic wins over time. So again, um, this is on my Twitter. I appreciate it if you guys go blow it up, whatever. But if you want to just save it, you can go there. I'm gonna put a Notion together soon with all of these infographics and an ebook and stuff, so that way you'll have a little bit easier access to it. But for now, it's on the Twitter. If you want to look at it, if you got any questions, always feel free to ask me. I'm always down for that. So now, a lot of people are wondering what the fuck is going on with crypto. But any of you guys who've been here, we know that we've pretty much been expecting this. We've been talking about this draw on liquidity here. Let's go to the chart. It's on this chart. I guess I deleted some of this stuff. Now, this was the imbalance we've been talking about. I know JL had the same target. We were talking about this like yesterday. It's crazy how fast it happens. I think price was up in this region when we were talking about it. And I think it was yesterday morning actually. So it was probably higher. So
It was,
it was yesterday morning, right?
yeah, like 2 in the morning.
Was it that? I don't think it was that
Yeah,
late,
like
was it?
2:30 in the morning is when we dumped hard.
Oh, when we dumped. I was like, I don't remember being up that late. I meant when we were
Oh.
like when we were talking about it. I was like, really, was it?
Oh.
No, but so that was met, and we've been talking about this really ever since like this daily candle. As soon as that second daily candle started drawing down, and again, remember, I just want to open this up so you can see. I already exited out, but you guys saw that three drives pattern I was talking about in the low time frames. So look what we have in the daily, three drives, right? It's the same thing, and also guess what it was into. I know ICT even tweeted about this shit today, and you guys who's been here, you could vouch. I've been saying this shit for the last like week. I saw this today, and I was like, even he doesn't even trade Bitcoin, and it's clear as fucking day. I saw somebody post. Yeah, look at this. And this is what we've been going over for like the last, I don't know, 4 or 5 days. Um, so it's
You
it's
called
not
it
hard
to a
to spot.
T.
Yeah, huh? It's like literally to a T. I don't know. Is it on right on equilibrium as
It
well?
is.
Right above it. I mean, that's like it's free. Like that was, you know, spot that from a mile away. So Bitcoin was the easiest of the weekly buys since this is the weekly recap. Um, you know, you guys all know I've been saying Bitcoin's going to dump. We've been saying it was going to come into this imbalance, and we also have been saying that if we don't find a reversal here somewhere in this area, I mean, the overall target will be these equal lows. Now, I'm not going to say I expect that, and we are still in this daily demand candle. So this is the first time I've looked at it. So we'll take a look. Um, we can go to 4 hour and refine. Here is the order block I like right here. So the reason I like this is because it took liquidity, right? We see not one but two liquidity pools that it tapped into before a rapid expansion, right? And we actually caught this move too in Playbit. I know that some of you guys have been with us for all. We caught this move, I think it was at like 2,800. But now we're back to that area where that demand was created, right? So whenever we get into this zone, we're obviously seeing some form of reaction right here, seeing displacement to the upside. Now, I'm not going to be one to trade on the weekends, but I will tell you this is the reaction you want to see if you're trying to be a bull here. I will say that this doesn't look bad right there, but you know, time will tell to see if we hold. The zone I like that again because like why it took liquidity. So when you're picking order blocks or demand zones, whatever you're going to call them, I think that I'm not going to tell you to require it, but I'm going to tell you that you will refine your trading plan if you do require your order block to take liquidity. Because again, an order block is whenever we're talking about mitigation, market makers enter sells here to induce liquidity for them to buy. Right. So if price comes back down to those areas, they're going to mitigate those orders. That's why we expect a reaction and expansion from them because those sellers are going to get closed. So once that occurs, this liquidity raid, we can identify this is going to be a higher value order block. Now we can also use fair value gaps. We don't have much as enough um, on the 1 hour yet in order to draw that out. So, I'm a big fan of the fair value gaps lately. Now, um, you know, I'm gonna keep an eye on this. I might end up trading this, to be dead honest with you guys. But it doesn't look bad. Way I would do it, because I do have my daughter, and I'm not gonna be super active on charts. Definitely not tomorrow, but I will set some alerts. I'll kind of cherry pick this one. If it comes, it comes. But those of you who are watching, I like this zone right here on Bitcoin. Specifically, what I'd want is a breakdown into it, 5-minute change of character, and that would give me enough for an entry. Since this zone's pretty small, personally, I would just try to use this as like your invalidation point. If even if the 5-minute gives us a new invalidation point, just my strategy, just because at the end of the day, I think you could probably hold on to this one for a little bit. Now where would I look to take some off? Because I'm not looking at this like a very bullish scenario. To be honest, this 3 drive to me and this displacement to the downside, I mean, yes, our weekly draw, um, you know, was the end of this imbalance, but at the end of the day, the imbalance doesn't have to get filled. We did come into a premium, a deep premium of the weekly imbalance. So, this kind of displacement, the weekly candle closes in 2 days. I mean, me personally, if I'm talking about the weekly, I'd almost look already. If we close anything looking like this, I'd look for these lows here. If not the 17,593. But daily, I could see maybe a push back up, depending on how this candle closes. We got, okay, never mind. I forget what time it is. Okay, so we do have a whole nother day. Now, the impulse move that caused all of this mayhem is really this to me. I would look probably for, I'm going to go to the 1 hour. This high holds interest to me. The reason being is it's the first area of liquidity in a premium. We get like a 15-minute maybe. I like that high personally. You also have this imbalance right here. So if we're talking about institutional structure, we know that if price is seeking the sell side, yes, price might come up and get back into this area, but we're expecting there to be orders in that fair value gap. So that's kind of where I'm at on Bitcoin. You definitely could take profits at like this high as well along the way. Wouldn't hurt, but I'd be probably taking most of my gains at or around equilibrium. Now the weekend can induce fucking mayhem with crypto. We all know that, but that's really all there is to it on Bitcoin. It's pretty cut and dry. So overall, how far did SPY go? Oh, that's sad. It went without me. There's actually a nice. I can't even say I would have taken that because it was during the lunch hour. But if you see here, look what else happened. Look, highs, imbalance. Right. So again, we're talking about institutional structure. We're looking at where the order's at and what kind of liquidity is being sought. We can obviously the sell side is being sought here, right? It's being sought out. So once price comes back in, it takes out all these orders. Smart money is positioned again for another move down, and then it goes for the sell stops. Right now, the markets are closed for the weekend. Overall, again, what do we say? We are at key levels. We've been talking about this. We're above these equal highs. Where could we look for price to go? Well, what I'm looking for at this point is somewhere in this imbalance. That's where liquidity is magnet. That's where I think the draw on liquidity is. Somewhere on between 4151 and 4200. Now we can't really. I'm not gonna really take credit for calling this weekly bias. Yeah, I don't want to be a bullshitter. I did say basically I wanted to see where we kind of went with this. We did at the beginning of the week. We said everything was drawing to the equal highs, but I don't think that's much to. I'm not gonna sit here and be like, oh, I called it. It was pretty clear as fucking day. Anybody could have called that. So, but we have been talking about it for a while. To be fair. Also, from the Discord, Morvog says, "Do you want to see a close under the low on the 1 minute, or do you just enter as soon as it breaks?" Sorry, that's you just said. Okay, that was about 10 minutes ago. So preferably, I want to see a close, but really, it's just about the displacement. I mean, requiring a close wouldn't be a bad idea, especially if you're starting out with the model. But once you get a little bit of a feel for it, you've seen the price action play out, 10 to 15, 20 times, you start to get a little bit more familiar with it. And just like it's like riding a bike, you'll start to get more comfortable. But I would recommend it when you're starting to require a close. And I'm guessing for those who are wondering, he's referring to the trade model in the AM. So also anonymous bread, yeah, called it perfectly. We did. We were pretty on point with it. So we'll go over two of these trade models. We'll start on the 15-minute view. So this one we called live over here. We caught the bottom, and a lot of times the nice thing about this trade model is you can catch the entire move of the day. I don't want to guarantee that, or again, NFA, not financial advice. No, but you can oftentimes catch the move of the day if you pull this off correctly, because what's going on is, again, we have this imbalance, right, where we're anticipating that smart money orders reside. So there's a lot of money here, right? In order for these big orders to get filled, remember, they didn't even get filled on the way up. Why? Because the market was only offering one type of liquidity. Price was rushing for buy side liquidity so it could find an equilibrium, and that's why we started ranging right here. So you have this range. So once there is displacement out of that range, right, these big four move. Now this candle right here doesn't look the same as it did whenever it was under that low, and that this also can help us with confluence, that this is a raid. And if you've ever heard somebody talk about, you know, um, if a candle doesn't close above or below the level that it's probably a liquidity raid, what you're visualizing when you see that wick is that low time frame execution model. Again, time and price is just what we use to visualize occurrences in the market and read the tape in our own form of way. It just simplifies it. So if we see a big wick on this candle on the 15-minute, we know that what's actually going on is our entry model on the 1 minute. Now, again, like I said before, it doesn't have to be a swing high or swing low or an internal high, internal low for me. Now, yes, in this example, we did take that as well, right? Because, actually, I can't tell if these right here are, let's see, hold on. So the low is 818, 818, they're equal. So theoretically, actually, yeah, it still did get taken up here. So, maybe that's how you require. Again, I encourage you guys to go out and take this. And if you find a better way than me, so be it. And if it works, back test it, and fuck yeah, then we can all win off of it. But this is the way that I've found for it to work for me. I just wait for this occurrence, that first high, especially if it's daily bias, because again, we were targeting the daily equal highs that we've been talking about for a while. So once we get that break, again, like I said, sometimes I'll just enter. Now, could I have gotten a little bit better risk reward had I waited? Sure. But for me, I think it was it's $1.40. I'm okay with taking it right there. That's just my strategy. Um, Maybe you want to wait for the fair value gap. You can see that if we waited, you could have maybe even waited for EQ of the fair value gap. Some people wait for the demand candle, which that didn't hit. There's different. Take your own sauce and throw it on there. But this is the way I do it. So we entered right there, and we all know how that played out. So um, and that's how you can catch that move, because if the market makers intentions are to bring price higher, often most of the time at first they're going to send it lower so they can come back down and fill these orders within that fair value gap, and they're going to need to raise this liquidity to do so. So that was it on Wednesday or Tuesday? I don't know, I think it was Tuesday. So now today, this happened very quickly and very dynamically. It happened earlier than it usually does. So we'll go ahead and we will throw a vertical line right at market open, and it happened in that first candle. So this is the first time I've played one that happened this quickly, personally, in a while. But if the model presents itself, then take it, right? And this morning I almost didn't take it, but I was just like, you got to be consistent. So I took it. Hold on, I'll show you guys that I took it to. I'll even throw this little GJ loss that we ate last night. We'll go over that too. Actually, I kind of forgot I wanted to go over that with you guys. Let me put this on my Discord so I can post it on the screen, so you guys know I'm not bullshitting.
Dude, I'm drawing up some fucking heat on Bitcoin right now.
Uh oh. So we took this. This is the loss we took on GJ last night. We'll go over that in a little bit, but got it back today on SPY. You can see the times are these are 6 hours. Or not 6 hours. What's it called? I can't remember how many hours. It was 9:51 a.m. So it's, what is this? I think it's 7 hours. That's what it was. So it's 7 hours ahead, and took that at, like, this when it closed. I closed it at like 9:51. But there's that, so you guys know I'm not just fucking with you. And yeah, I hate whenever people always do hindsight, because everybody's got 2020 in hindsight. I mean, I think we can learn off hindsight, but um, it's important we execute. Again, that's super important. So going back to the entry model, remember we found our high. Maybe I'm getting a little ahead of myself. We found our high, this morning high. There's a 5:30 in the morning. We found that little morning range. You're just looking at, where do we move impulsively? Look, there's an imbalance that's not filled all the way. Really, there's two imbalances. But then again, if we go to the 1 hour, there's an imbalance, a small one, right, that it went into. You can look on the 30-minute. There was probably an imbalance. I don't really use this time frame, but there you go. You see what I mean? So again, it's just identifying where orders might reside. In this example, I know I like using the 15-minute, but in this example, it's pretty clear. It was the imbalance fill. It filled all the way. Now, I don't require that. Again, I just require a push over the high with displacement. We can see this is a rapid move up, and a big bodied move up, to where people are doing one of two things: getting scared to sell and stop that on their shorts, or they're breakout traders and they're buying this breakout, especially at market open. Market open, the retail liquidity starts pouring in. This is when you see the true intentions. Again, like I said, you'll see it in the first 3 5-minute candles 90% of the time. So in this example, we were already in this at equity open, right? Or we were very close. Now that third drive happened right at equity open, right? I think it was, or no, second drive happened right at equity open at 9:31, right? So then here was, you could have, maybe you took a trade here. Even if it happened, you got stopped out. Not the end of the world. That's why I like using the three drives pattern here. And again, this is one of those things you get a feel for it, but really the trigger is just a break with displacement and ideally a closure. With this example, you really got that right there, but that three drive was in play. We came out and took that high of the last time and filled the imbalance. So really, also, this was more of a displaced move. We see those two huge bodied candles, broke structure. I just shorted like right here. It was just immediately. It was somewhere in this candle, and I had to open a couple positions, so I got filled all through here. and I just held into this low. Right now, this didn't take very long at all. Again, you guys saw it closed at 951, closed right. It didn't actually. I think my spread, I put it like a little higher because I try to account for spread. So it hit on this candle right here. So I got exited out of that position. Very quick, easy trade. So sometimes it doesn't happen that quick. Sometimes you'll ride out through the day. But if you don't meet your liquidity target by lunch, I highly encourage to take some profits there, because if we're going to see a reversal, it's going to happen right after lunch. So in this example, we didn't see that. You actually got another trade opportunity after, looks like right at 1 p.m. So he came out, took the highs, and look at this. 1, 2, 3 drives. It's that fucking simple. So then bam. Where did we get the break of structural displacement? Right after that third drive. Sorry, I messed that line up. So you can bam right there. And then you could have, like I said, you can enter in the fair value gaps. You can enter um, as soon as it occurs, whatever. See, in this situation, this is probably when I would have entered as soon as this occurred. Right now, again, do as you wish. You can see it would have been, what is that? So 37 or well, $3.7. It would have been 80 cents, which, that can make a big difference to some people. But to me, it's cool. Where would you have targeted? To be fair, in the PM session, you could have even targeted a clean 2R really quickly. Or, if your daily bias is down and this goes along with that, you can just target the lows you made earlier. Now, again, extending your targets increases the likelihood that you will not hit them intraday, especially in the PM trades. But yeah, that's how you could hit a quick 4.5 to 1, which is a great risk to reward. Great trade, especially for a trade that took um, 2 hours. Very, very clean. Right before market close, too. Or I'm sorry, no, that was right before 3 p.m. My math's fucked. um, but yeah, so that's kind of more of a review on that. Again, now we talked about this with NQ. So this one I will take credit for. We said that as soon as we took out these highs, moving us imbalance, we're at a key level. As soon as we start moving away from that, we're going to look for what? The daily imbalance fill. So the Nasdaq's at a pretty decisional point, in my opinion. On Monday, we want to see some form of bullish price action. Now, well, I shouldn't say on Monday. We just want to see it before we take out this low. If we take out this low, I think we're coming down into this imbalance and so forth. We'll just use it as stepping stones. But if we can hold within this candle, maybe there's some 4-hour. Yeah, there's a 4-hour imbalance. There's this 4-hour order block over here. I keep refining. There's this 1-hour order block holds some value, in my opinion, like 13,076. So that's where we want to see buyers step in. We want to see displace or break structure to the upside if we want to see any form of bullish narrative. Now, I'm not saying I wouldn't be surprised to see that. We could come up, take out this high, go deeper into that imbalance, deeper into the premium. But again, we just want to take it step by step. We don't want to just try to predict the future. So that's really going over most of the daily bias. So the indices and Bitcoin, pretty on point. So I'm happy with that. Also, now I'm going to read some of these things. So a question, sure, Adeliki, ask away. I got you.
You said you were gonna go over a trade you got stopped on.
Oh, GJ. I'll show you guys what the logic was. So one TP did hit, so it wasn't like a total loss, but still it was a loss. So I always like to review them. So the logic that I had was we had this 1-hour fair value gap. Price, okay, first off, let's go to the daily chart. My logic here was price came down, took out these lows, right, and then showed intention to go higher. Right? It didn't take out any form of liquidity pool except this high, which to me, that doesn't really hold much interest when we have all of these equal highs here. Now, we did take out, trend line liquidity if you want to draw like that, but what I really want is that major high to be taken and us pull into this imbalance. So my daily bias was up. So going into the trade with my daily bias being up, I was looking for a long, and then once price came back, we saw this massive reaction off this demand candle down here, right? So price pulled up, a lot of displacement. Now, if we're on the 4-hour and we look at the impulse move, if you draw it like this, we were right around equilibrium. So I was looking at it in the form that, we're in imbalance. I refined it to a 1-hour that was right at equilibrium of the higher time frame impulse move. And I saw as price came into it, we pushed high to the upside and got that break of that short-term high over here. Okay, and we did so leaving a fair value gap. So once price came into that fair value gap, we go down to the 5-minute. We didn't necessarily get a break of structure yet. So this is where I was looking at it. It was later at night. I liked the setup, and it looks like it wanted these lows right here, which I kind of thought about waiting, which I should have. Obviously, we would have got a much better profit at the first target, but didn't wait. So price came back down, took out those lows. People were tripping a little bit, and then we came up and took profits there. Very minor for me. I basically still netted a minus 0.7 R off the trade. First loss we've taken all week, so I'm not super bummed out about it. It is what it is. But reviewing it, looking at what I could have done better, probably not traded it at all just because of the time. Now, the only reason I took the time was because of it's a yin pair, and it was during Asian session. So usually I don't trade during Asian session, and the markets, that gave me more of a reason not to do so. Now, I'm not blaming it on that at all, but I am just looking back at saying, okay, why or what could have prevented it. Number one, just not trading out of session, because price will move a little differently. Now, we did hit a target. Now, if we I guess number two thing, I guess I should say this is, should have waited maybe for this order block down here, and then if I'd have done that, it would have been a great trade just targeting right there, and could have been something like that instead. But I wanted to write it out to the daily bias, so I looked at it like, okay, we've seen this massive expansion of the upside, and was looking for price to go to the equal highs. But we hit one target profit or take profit above these equal highs. You can see that area was valuable, but it also was powerful and propelled us down to a stop loss. So looking back, main things that I could have done differently: waited for this order block, but I wasn't really trading a supply and demand entry, but that's where the better entry was. And two, just not taking the trade because of Asian session. And personally, I know some people that murder Asian session. I don't really have, unless it's crypto. If it's so, definitely crypto during Asia, but I usually don't have the best efficiency during Asia session. So reflecting on it, that's how I'd look back on that. So also, I see would maybe do a replay of one of the daily opens if there's time. Yeah, sure, we can do that. Also, I want to answer Adeliki's question. What did I just click on? Okay, never mind. When you've gotten into your 4-hour order block, do you wait for 15-minute confirmation or use your 5? Great question. So 15-minute, then 5-minute, and then 1 minute if you really want to get crazy with it. But 15 first. Also, if the 15-minute high is quite far from the recent PA for you to have a 15-minute confirmation, will I consider the 5-minute? Absolutely fucking not. That is forcing a trade 101. Don't do that. I see the logic, and oftentimes, like in that scenario, what'll happen, like for instance, if I know exactly what you're talking about too. So let's say here's your 4-hour POI, and price does this, and then it's down here, and it's like you're like, oh, I'm never gonna get a 15-minute change of character. Well, guess what's probably gonna happen? It's probably gonna do this, and then it's gonna go down, and then it's gonna go down, and then you're gonna get that 3 drive, and you're gonna have that tight market structure you need to get the 15-minute change of character, and so on. Don't force shit. Because that 5-minute change of character that's going to occur right here, guess what that's telling you? That's telling you that the 15-minute pullback has begun. You're not confirming that a 15-minute trend change has happened. So if the 15-minute pullback's begun, guess where it's going to go to? It's just going to go back up to that price delivery array in a premium of that 15-minute range. And it's telling you, yeah, the pullback's starting, but the institutional structure is still to come down and take out the low. So until that structure has changed and the displacement is going in your favor on that 15-minute, you have no trade, in my opinion. Now, if you take a trade, maybe you took a 1 minute or 5 minute trade up to this area, yeah, sure, but don't try to take a trade, back to, the crazy high that caused. Don't try to take something all the way up there from that 4-hour POI. Using this structural confirmation, you're kind of skipping a step. So there's a reason you want to layer them. So that's a really good question though, because I'm sure a lot of people have the same curiosity. But don't force trades. Let them come. If you ever catch yourself like changing um uh changing your strategy, if you will, your mind is that's one of the 4 fears of trading that we discussed in the private class. So somebody said, anonymous, I'm going to check FTM for you in a second. Somebody also said, so your TP1 on GJ, even though it broke structure upwards around there, was it just a liquidity grab? So you shouldn't take that as a signal of trend change. You should wait for a new low to form if it was a liquidity grab. If you were using, yeah, it was obviously a liquidity grab for sure. That was the reason I put a take profit there, is because there's a liquidity pool there. Now, of course, we don't know if it's going to reverse until we get that displacement break of structure, which it got, right? Now, where was that going to go? You necessarily, I'm trying to think of how to say this. You could look at it like, yeah, if price hits a TP, oftentimes you're going to see that reversal. That's why we put our take profits there. If you were using this as a confirmation, you really wouldn't be using this. So to answer your question, if, for instance, like this over here, right? See how we got a closure above it? That would be one way to, confirm, I guess, that this wasn't just a liquidity grab, right? And also the reaction of the fair value gap or the demand that sponsored it. So yes to what you're asking, but this wasn't really the confirmation. But if it was, like, if you wouldn't want to see this kind of reaction. And more so, it's really seeing the reaction once you get back down to whatever sponsored the break of structure. That's what's more important. So that's pretty much it. We can go back. Somebody asked FTM. I'll do that, and then also we can replay a market open. Why does crypto always gotta fucking do this on the weekends, dude? You asked, there's an inside bar right at the drop. Give me a time frame. Also, equal lows, draw and liquidities met. We're in this imbalance. Again, it's make or break it here for a lot of cryptos, right? We can refine this daily demand down probably to a 4-hour. Everything looks the same right now. It's almost like the markets are being manipulated. But this is what I'd look for. I mean, we're already in it. This doesn't look bad. Nothing really for me just yet. It looks like it's soaking up that sell side. You see those wicks. It's reacting to this demand. Maybe get one more flush to take them all out and stop out the early traders. You want to see that displacement break a structure with fair value gap. Again, guys, if you want to if you have to capitalize off this move, be ready for it to happen the weekend. I'm not saying it's not going to happen the weekend. Mayhem ensues on crypto weekends, but I can tell you that I'm personally probably not going to be monitoring it super, super heavily. I got my kid. I traded all week. There's always going to be another move. I don't care to miss it, but I'll try. I'll try my best. Bitcoin, I got those alerts set. That's really the one that I'll pay attention to. I'd love a pump. Okay, CHC. We talked this last night. This is getting really perfect. I'm actually going to set an alert above this high. So see how we talked about after we broke structure to the downside, we talked about waiting for this with displacement and volume. That occurred, and now look at that. We've got a high front running our zone. Right, that's inducing liquidity there in order for the institutional orders to be filled in the imbalance or mitigated in the supply candle. This is going to be a good one if it gets back up in there. So this is another one. I got alert set. I'll do my best, but keep an eye. I'm giving you guys the setups, so I'll do my best to try to watch them. What we'll do is we'll replay the morning open. This one we'll go to 1 minute so you can actually get a better view. And then I'm gonna hop off here. I'm gonna grill some burgers and chill with my little one. So what time is this at? 9:29. Perfect. I got it right on. So this morning is a little weird. Now we can watch immediately. Price moves up rapidly above the high. Maybe I can put this down a little bit for you. So, we see that 3 drive price comes up, and then that's, you're seeing this live. You saw how that looked. That's displacement. That's where, you're like, okay, we broke down. And what this is showing is that smart money is selling to these induced buyers. If we're seeing lower lows and we're seeing that change or shift in market structure, we can say that might be the beginning of a trend change. Now, we know that not every single change of character or shift in market structure is a trend change, but when we pair it with an imbalance, we pair it with our daily bias that price is going down, we pair it with the fact that we have rated buy side liquidity, now you can use that and say, okay, smart money is selling to these buyers. Somebody said, hey, I mentioned a while back I was thinking of setting up my trading view alerts on Twitter. Yeah, I need to do it. Honestly, I forget. I need to do. I don't want to spam my Twitter, so I'll probably make like a different Twitter for it, and webhook it. Give me some time. I'll have it done though. I promise I will. If you guys would like that. The only thing I do worry is people just like getting an alert that something's in demand and they just fucking buy it. That's not how you do that. But at the end of the day, that's on you guys if you do something dumb like that. But yeah. The goat Frizz is talking. The coder. This dude's got yeah, we can set up in Discord too. We can do it on Twitter and Discord. It's literally like super easy. We go to the alerts. We just fucking hit the webhooks. Oh, wait, I'm in replay mode. I hope that was good enough for replaying the open. It's kind of, again, that's why we stream the opens. It's not always easy to do it with the replay. The replay tool kind of sucks. I wish they had one like Thinkorswim where the 1 minute candle took 1 minute. That would be awesome. I think it's Thinkorswim that does that. But you can set those alerts. You just go here and webhook URL and put it there.
It is Thinkorswim.
Thinkorswim, yeah. See, that shit's nice. That's beautiful. That would be amazing, especially for back testing. But JL, did you want to show some of your TA before I get off here?
Oh, do you want me to?
Yeah, sure. I'll hop off. You got it.
Oh, I just put it in MPix.
Oh shit, I didn't even see it.
But basically, I was showing
pull
I
it
picked
up.
that zone specifically because like I said in my previous post, I was going over what our current market structure looks like simplified. So we could have either have just broken structure to the upside or lick grabbed. So we have the potential to put in a higher low. So that zone right there is where I think we're most likely to put in a higher low, if anything. You can actually see the zone that you're talking about right now has a good buildup of relatively equal lows on the hourly.
I like it. Now this goes hand in hand with what I want, because like that would push us higher into that imbalance. And even if we don't even get like the push above the old high, I could still see a push up for sure. Either way, I think that we're in a good zone. Like that zone that you marked, I think that I mean, who knows? We could easily just come down and like smash everything and go to fucking,
17.5, yeah.
Yeah, but this is like I agree with this. Like these zones are those decisional points. So it's like this is where everybody's scared as fuck to do anything. That's exactly where you want to get active. I like it. I also like the relatively equal lows you're talking about right here. I like that,
Yeah.
and I like that. And then there's that little fair value gap right between these candles. This is on a 6 hour. I was wondering, I was like, this looks a little different. Yeah, I like it. And so yeah, this that initial zone right there got mitigated, so you would look for a push maybe even higher.
Hey, JL, what's liquidity?
The fuck? Oh shit. Yeah, this would be ideal, and also this would just like be max pain for all the all the people that have been bullish. They're gonna switch bearish right here. They're gonna get fucking annihilated, and they're gonna switch bullish again up here.
Yep. And that's exactly why I have that liquidity up there. If you look at a accumulation schematic, that's why I have the selling climax and our possible automatic rally if this were accumulation, because we had a 43% move to the upside from the selling climax.
That would make
Which is-
that would make sense and this take a while. And then also, you know what else would kind of go well because
It
selling
would
clocks
it'd just be choppy all through September until our market's ready to pick back up.
they can get selling climax. They get smacked out too, though. Correct? Sometimes not. Always,
Correct.
but
So you don't always break the selling climax, but there is the potential to do that and put in an STB.
so like this is why I like it because look at the equal lows on the weekly we have. So we could move this at 17,593, 17,555. Like look at that shit. Like we'll see a reaction, and I guarantee if we go to like a daily, there's gonna be something down here maybe. Nothing really. I mean, theoretically, you've got a fair value gap. If you want to technical with it. Oh fuck! I didn't mean to draw. I thought I was drawing trend lines. You got that little fair value gap there. I mean, who knows? Also, that daily demand candle that caused the initial break above like 20K, I think. No, it wasn't. Yeah, it was the first one, I guess, like right there. But I would, I could see that liquidity rate into those, and then kind of move around there. But that I could see that. I almost want to leave my sell side liquidity over there. I could definitely see it.
We're gonna get fucked. Straight down.
Dude, you know what I'm saying? Like, oh man. And I could see this like being a super long term accumulation where it's like, like a I mean, when it isn't the next I mean shit, bro. Well, I don't know
I was
about that.
potentially looking at this whole daily range here as a preliminary support.
Literally, like just like the very beginning of it. Because look, guess what? Like if this somehow could play out till like 2024, I know that sounds fucking nuts, but if it could somehow like just exhaust the fuck out of everybody, that would be the next halving. Like, one thing I will say, um, I, it's almost positive. Now we don't know where it's going to go and this and that, but like at the next Bitcoin halving, we all know what happens with crypto at the halvenings. Also, Slim Kim put this up. There you go. This is ETH. This is. I guess this is like recently. I'm not sure. I don't know what date it is. It says 8:30. I don't know. Also, I don't know what time zone you're in, but yeah, this is a fucking perfect. And then you can see that this is the same thing we just went over with indices. Those 3 drives into our fair value gap. Also, there's a supply candle right here. Shout out the splinter cell charts. The real ones will know. But yeah, it's not like the craziest, most complicated thing. But here's what people fuck up with this is they will fucking short it 1, 2, 3 times and get stopped out twice, and then the third time just making up for their losses. But you know, but yeah, I guess that's really everything I wanted to go over. If you guys are trading the weekend, we could have that extreme. I mean, we all know what happens on weekends with crypto. It gets fucking rowdy. The demons come outside. But overall, I had that alert set. You know, we could look for buys in that area with 5-minute confirmation. Again, I'd probably personally be out around here fully. I'd take profits along the way. Not to say that's where I think we're going to for sure reverse. I just see it as if we're going to reverse, it's going to probably happen within there. So as always, I appreciate the fuck out of you guys. If you have any questions at all, you always know to get to me. If you're in the server, we're going to have a private class tomorrow. I haven't decided on the topic yet, but I'll let you guys decide. I'll post it up later tonight, and then we'll take a vote on what it will be, and we'll go over it tomorrow. That'll be at 1 Eastern. That's for the Playbit members only. And if you guys, again, have any questions, hit me up. If not, enjoy the fuck out of your weekend, and I will see you guys on Monday. Until then, don't get liquidated. Stay safe. I'll see you later.